Crude reality. Why this is a surprise for oil traders or anybody else today, I don't know. Because the EIA, the Energy Administration, it reported that inventories, surprise, we're so shocked, rose by 2.6 million barrels in the last week. Analysts were expecting a decrease of 2.5 million barrels, but oil companies and oil pumpers have not been able to show religion at all. They keep putting out too much. Andy Lipow is ready to make a bold contrarian call. He's one of the smartest in the business. For 2016, here's Andy Lipow of Lipow Oil Associates. Everybody thinks it's going lower and lower because Saudi Arabia, Andy, refuses to cut its production. The U.S. keeps producing, but you are ready to say what? Where's oil going next?
Well, I think the first quarter looks really sloppy, down to about $32.50. But by the end of 2016 into 2017, I think we'll get to $50 a barrel because supply and demand will start looking better in balance.
Why? I've heard that all year. Supply's going to look better. Suddenly, people will realize if we want prices to go higher, we will stop producing as much, and then they don't.
Well, I think if you look from the producer side, they're really running out of money. They no longer have hedges that cushion them from the fall in 2015. The banks are cutting credit. That's going to continue into 2016. Some drilling has been occurring so that they preserve their leases, but they haven't been completing their wells. So actually, I think in the U.S. we're going to surprise to the downside as far as production goes throughout 2016. On the other side of the equation, we've got demand. Demand was great in 2015. It was up 3% for gasoline in the U.S. Worldwide, it was up 1.8 million barrels a day year on year. That trend is going to continue. And if you look around the world, we're seeing really good demand from China, from India, from elsewhere in Asia, and here in the U.S.
We're ending 2015 with extremely low prices at the pump. I believe today the average gasoline price per gallon was pretty much an even $2. That is great for the consumer. This is an old conversation, terrible for the companies. Help us make money right now, Andy. Who does well? Is it the big integrated oils like ExxonMobil, or is it the oil services companies, Halliburton, Schlumberger? Or to me, I look at the refiners and I think that might be the place because there aren't a lot of them. It's hard to build new refineries.
Well, the refiners are going to have a pretty good 2016, maybe not as good as 2015 because the bad news for the I would look at buying some of the independents, yes, like the Valero, Phillips, Marathon. I think they're going to perform well in 2016 because on the back of gasoline demand is so good. That's going to help them quite a bit. On the integrated majors, really the one that's going to survive, obviously, is Exxon. The other producers, I'm very concerned about, pulling credit from the banks and not being able to go forward, and they may go down as a group. On the oil service sector, I would just stay out of it completely. These guys continue to be squeezed on price concessions, but not only that, the high-cost areas such as the Arctic or Canada or deep water drilling, they're still going to be under pressure. So companies like Transocean or Seadrill, it's hard to make a case that these deep water drilling rigs are going to be employed in 2016.
Well, yeah, I remember Seadrill was a hot trade of 2013 to 2014. I would say Valero right now is the only name in all of those that's higher today. Andy, Happy New Year. Good to see you.